Welcome. Today we're jumping into the latest Interactive Brokers earnings report. That's for Q1 2025. We'll pull out the key takeaways for you, their performance, what they're planning, and what it might signal for the markets. And the headline really seems to be pretty strong growth, right? Especially considering the broader market.
Yeah, absolutely. I mean, the S&P 500 was down 5% in the quarter, even more from its peak in February. But despite that, Interactive Brokers hit record quarterly commission revenue, first time over $500 million.
$500 million in commissions alone. Wow.
Yeah, and total net revenues also hit a new high. So, yeah, strong top line.
Okay, so revenue's looking good. What about bringing in new customers? Did that follow suit?
It did, and then some. They added a record 279,000 new accounts just in Q1.
279,000. That sounds massive. How does that compare historically?
Well, get this. It's even more than they added during the big meme stock surge back in Q1 2021.
No kidding. So the growth isn't just driven by market hype this time?
Exactly. Total accounts are up 32% year over year. And interestingly, international growth was even faster. It really points to their global strategy working, attracting users worldwide, even when markets are shaky.
Okay, more accounts usually means more client money on the platform. Did we see that?
Client credit balances jumped 19%. That's a record $125.2 billion. And client equity, so the total value in those accounts, was up 23% compared to last year, hitting $573.5 billion. It even ticked up 1% during the quarter itself, which is pretty solid given the market dip.
Right. And profitability. How are they managing costs relative to this growth?
Still very strong. The adjusted pre-tax profit margin held steady at 74%.
74%. Just pause on that. What does that practically tell us about their efficiency?
It tells us they're running a really tight ship. A huge chunk of their revenue is dropping straight to the pre-tax bottom line. Very efficient operation.
And they seem confident signaling that with shareholder returns.
Yeah, exactly. They announced an increase to the quarterly dividend and also a 4-for-1 stock split.
Okay, the stock split, just quickly, that makes the shares cheaper per share, potentially more accessible.
Correct. More shares outstanding, a lower price per share, often helps liquidity and broadens the investor base a bit.
Got it. So let's dig into what's driving these numbers. Trading volumes must have played a big part.
Oh, absolutely. Volumes were through the roof. Options contracts up 25% year over year. Futures volumes, they climbed 16%. And stock share volumes just exploded up 47%.
47%. Wow. Were these records?
Yep, all quarterly records. And importantly, they were growing faster than the industry averages.
And what about DARTs, the daily trades metric?
DART's daily active revenue trades hit 3.5 million on average. That's up a massive 50% from last year.
50% jump in daily trades. That's a very active user base.
Definitely indicates high engagement on the platform.
Okay, let's switch gears slightly to net interest income. That growth was a bit more modest, you said. Only 3%.
Yeah, up 3% year over year to $770 million. The main driver there was actually the higher client balances we talked about, more cash, more margin loans. But that was partly offset because benchmark interest rates have come down a bit.
Right, so the Fed rates, ECB rates, those kinds of things. Lower rates mean they earn less on some assets.
Exactly. If you break it down, interest they earned from margin loans was up 14% because the average loan balances themselves were up a huge 38%. But the interest they paid out to customers on cash balances actually went down because those benchmark rates were lower. So a bit of a mixed bag within NI.
Makes sense. You mentioned faster international growth earlier. Where are they seeing the most success globally?
Well, Asia was leading the pack. Fastest growth in both new accounts and client equity there. Europe was strong too, just behind Asia.
And who's driving this growth? Is it institutions, individuals?
Interestingly, it was primarily individuals leading the charge in account growth, commission growth, and net interest growth. It really underlines this global demand, especially from individuals wanting access to, international markets and particularly the U.S. markets.
So for you listening, this diversification, tapping into that global retail demand, could mean more resilience for them long term.
Precisely.
And they're not standing still on products either, are they? What new things have they rolled out?
No, they're always adding things. They launched those ForecastX contracts. Those are the event contracts in Canada and parts of Europe, the EEA, for pros initially. Also launched Canadian first home savings accounts. And a big move in crypto.
Oh, yes. Crypto. What do they add?
They added 7 new coins. Solana, Cardano, Ripple, Dogecoin, Chainlink, Avalanche, and Sui. Brings their total offering up to 11 coins now.
It's quite an expansion. Is adoption picking up there?
They mentioned adoption is actually a bit slower than expected so far, but clearly they're positioning for the future, maybe anticipating more regulatory clarity or just seeing long-term potential. They also started trading Nifty 50 futures in Singapore and equities in Slovenia, so broader market access too.
And I saw something about overnight trading taking off.
Yeah, that was pretty staggering. Activity during their overnight session jumped 250% compared to last year.
250%,
Yeah.
that's huge. What's driving that, do you think?
It really speaks to the 247 nature of markets now, right? Global news happens, people want to react immediately, not wait for the opening bell. It's a different world.
And then they added a specific order type for it.
Yes, a new focused overnight plus day order type to cater specifically to that demand.
Okay, so revenues are booming, activity is up.
Yeah.
How are they managing costs through all this? Did expenses balloon?
Surprisingly, no. Expenses were kept well under control. Staffing, for instance, only increased by a modest 3%.
So really efficient scaling then. Good operating leverage.
Definitely looks that way. And they also mentioned a potential tailwind for costs coming up.
Oh, what's that?
The SEC fee rate reduction. It kicked in May 15th, so after the quarter ended, but it should help lower their execution and clearing costs going forward. Just for context, those SEC fees were about $27 million in Q1 alone, so a reduction there could be noticeable.
Interesting. What about bigger strategic moves like M&A? Are they looking for acquisitions?
They said they're still looking, but the current valuation environment is making it tricky. Finding targets at prices that make sense seems to be a challenge right now.
So high prices are making deals less attractive for them.
That's the impression, which kind of explains the decision to increase the dividend instead. If you can't find good acquisitions, return the capital to shareholders.
Right. Seems logical. It's always interesting to hear about what happened after the quarter ended. Did they give any color on client behavior in April?
They did. Apparently, with the market volatility picking up in April, they saw a bit of deleveraging. Margin loans decreased slightly, maybe 10-12%.
So clients getting a bit more cautious.
Seems like it. And the trading mix shifted a bit too. Fewer options being traded and more activity in futures, fixed income, and FX. Again, typical reaction to more uncertainty.
But what about new money, new accounts in April?
Yeah, interestingly, new account approvals actually saw a significant increase in April, and cash inflows were higher than expected too. It's a little unclear how much of that inflow was new money versus people selling assets or reducing margin, but activity overall seems to have settled back to the average levels of Q1.
Okay. What about external factors, like all the talk about tariffs and trade tensions? Are they seeing any impact on international clients trading U.S. stocks?
They said, for now, no. They haven't seen any reduced appetite from non-U.S. clients trading U.S. names because of tariff concerns. But they did add a caveat, that the long-term impact is hard to predict because the whole situation keeps changing and the announcements aren't always consistent.
Plus, there could be other factors, maybe lower taxes or deregulation offsetting it.
They mentioned that as a possibility, yeah. It's complex.
Let's circle back to crypto for a second. What was the trigger for expanding their offering so much now?
It sounds like it was largely driven by regulatory shifts, specifically the SEC pulling back some accounting guidance about safeguarding crypto assets, and maybe some signs that the SEC's enforcement focus might be shifting, although that's always hard to read.
So regulation easing slightly, or at least changing, opened the door.
Seems that way. They noted their trading costs for crypto are competitive, but as we said, the actual influx of crypto traders has been slower than they thought it might be.
And they increased the account limit for crypto holdings.
Yes, clients can now hold up to 30% of their account's net liquidation value in crypto, up from 10% before.
Yeah.
So a bigger potential allocation.
Okay, and briefly, those event contracts, ForecastX,
Yeah.
is Interactive Brokers offering those directly?
So they own the ForecastX exchange itself. That exchange will list contracts, including sports-related ones, for other brokers, other FCMs. But Interactive Brokers, the broker-dealer, hasn't actually decided yet if they will offer those specific contracts directly to their own clients.
Right.
TBD on that one.
Got it. Any interesting notes on European markets or other international dynamics?
Well, they confirmed that international clients are very active in trading U.S. options, but also significant volumes in Asian options traded by Asian clients, so activity across different regions. There was also a brief mention of watching whether a sort of Magnificent Seven equivalent might emerge in Europe, possibly linked to defense stocks, but that's more observational at this stage.
Right. Finally, let's quickly cover interest rate sensitivity and the dividend policy specifics. How much would rate cuts hurt their NII?
They gave some estimates, a quarter-point cut, 25 basis points in the Fed funds rate. They reckon that would reduce annual net interest income by about $65 million based on March 31st number.
Okay, and non-USD rates.
A similar quarter-point cut across all the other relevant benchmark rates would trim annual NII by about $29 million.
And if rates fell more significantly, say a full percentage point.
A full 1% drop across all benchmark rates could potentially lower annual NII by around $364 million. So definitely sensitive to rate moves.
And the dividend policy, they have a target range.
Yes, they aim for the dividend to be somewhere between 0.5% and 1% of the stock price.
Okay, great detail there. Now, let's pivot to our This Is Not Financial Advice segment. Time for some outrageous but plausible ideas inspired by this call.
All right, let's brainstorm. We heard a lot about that really strong growth in Asia accounts, client equity, the whole bit. Faster than other regions.
Yeah, that really stood out. This demand from Asian investors for global market access seems quite robust.
So here's a thought, purely speculative, of course. What if you considered, say, a long position in a basket of ETFs focused on Southeast Asian markets, maybe Vietnam, Indonesia, Thailand, places like that, and you pair that, perhaps, with a short position in a broad European market ETF?
Okay, what's the thinking there? Betting on Asia outperforming Europe.
Kind of. The idea is if that Asian growth story keeps playing out demographics, economic development, while maybe Europe faces some ongoing challenges, you could see Southeast Asia outperform relatively. And Interactive Brokers, with their strong Asian presence, is kind of plugged into that underlying trend, even if this trade isn't directly about IBKR itself.
Right, it's a macro play on regional divergence, inspired by their client growth patterns. Again, totally hypothetical, not advice.
Absolutely not advice, just an idea sparked by the call.
Okay, second idea. Let's talk crypto again. They expanded the offering significantly, adding all those altcoins.
Yeah, Solana, Cardano, Ripple, Doge, Chainlink, Avalanche, Sui. Quite the list. But they also said adoption's been slow, even though their costs are competitive.
Right. So maybe the outrageous idea here is a small, very speculative bet on some of those newly listed altcoins.
Exactly. The thesis, again, highly speculative, is that having these coins available on a big, reputable platform like Interactive Brokers with potentially lower fees than some crypto-native exchanges could eventually draw in more retail interest, maybe even some institutional nibbles down the line.
So you're betting that the platform's legitimacy and accessibility might eventually boost demand for these specific coins, leading to outsized gains.
Potentially. But the risk is obviously huge. It's a pure bet on future adoption and sentiment in a super volatile space. Extremely high risk, definitely not for everyone, and not financial advice.
Understood. Purely food for thought there. Okay, that wraps up our deep dive into the Interactive Brokers Q1 2025 earnings call.
Yeah, we covered the record growth, the strategic moves like crypto expansion, focusing on global markets, and some of the market cross-currents they're navigating.
Hopefully this breakdown gave you some valuable insights into a major player and maybe some broader trends. Remember, this is all informational.
So what really jumped out at you from this discussion? Did anything spark questions about your own view on global investing or the brokerage landscape?
Yeah, definitely keep digging into these trends. Join us next time on Talk Tickers for another earnings call breakdown.
So thinking about that strong international growth at IBKR, does that make you reconsider the global balance in your own investment thinking? Something to ponder.